All right. Hey, Discord, can you guys get me on audio pretty good? Sorry about that music on the opening. That was usually the volume's really too high when I hit play. I have an excuse for why I was kind of rushed to get things started. But anyway, welcome to the weekly close live stream. I do this every Friday at the end of the close of the market. This is an opportunity for me to get ideas from you guys. I know a lot of people come into this because they want to hear about opportunities, but I've actually ended up being able over the last couple of months and years since I've been doing this, generate opportunities from this live stream. And I had a good props. Someone gave me props on my Discord, by the way, link below. I stream this every week on Discord, TradingView, which I love, and YouTube. On Discord, someone thanked me for Netflix. Netflix is a rather, I wouldn't say big, but it is a significant short position that I have going into this bearish couple of weeks that we've had. And while this was a combination of the indicators that I use in my trading, I talk about on my live streams, which is the result of a decade of trading and just simplifying indicators down into what I think is the prime, most valuable components of price action analysis. All that gobbledygook basically means that Netflix hit a resistance, failed to break out, and we went short about 3 weeks ago. And so far, that's let us have a good short position. Us, because I know that several people that watch the live stream. I need to go back in that live stream 3 weeks ago and find out who that user was that said, "Hey, go look at Netflix," because believe it or not, I can't look at every single instrument out there. And so that's one of the reasons I do this, because I want to give back. I want to teach people what I think is valuable, what is actually valuable when it comes to trading and investing. And that's why I do it. I really want to have a community where people, share ideas, but not get in, echo chambers of negativity. There's plenty of negativity out there in social media. I'm not talking about people flaming each other and trolling each other. I'm talking about just the general doom and gloom that pervades market sentiment. And I've been very much on a crusade against it for, I would say, this latter half of my trading and investing career, when I've started reaching out and speaking in my mind to the world, to you all, because I just don't think it's very profitable to sit there and look at charts that portend doom and gloom. And I'll go ahead and get it out in the first couple minutes here. What is this? What's this indicator that Norok is looking for? What am I looking for as my prime inflation indicator? And it is actually the one of the things that I care about the most in the economy. Is the price of pomegranates. I love this fruit. Actually, this fruit has a long history. It's a symbol of fertility going back all the way to Egyptian times. And I was very worried that this year, after all this talk of inflation, I was going to have to pay more at my favorite grocery store, Kroger, which, by the way, I'm also talking my book here that Kroger is something that is good to be long from the 42 level. But I saw in the grocery store this week, last year, pomegranates go in season about mid-September through about January, and that's when they're most delicious. Don't get those at the end of the summer that they sell for $5 a piece. They're horrible. But last year, Kroger was selling pomegranates for $4, and I was really interested to see what they're going to sell it for this year, because after all, we've got Weimar Republic, Zimbabwe stuff going on, right? With a week ago's CPI going up 0.5%. Well, this week, I'm happy to say that I was able to find pomegranates for $4, which means that my PII, the Pomegranate Inflation Index, is only up 0% year over year. And so I think that should give everyone a good bit of sigh of relief that turns out this great economic model, capitalism, money printing, all that sort of thing, yeah, maybe it'll be bad. But right now, the Keynesians tend to be winning the argument. I'm referring to Keynesians being the people that are about modern monetary theory that just keep printing money. There's plenty of channels and people that will talk about how horrible this is and how it's going to have just terrible, terrible results. But I don't know if they actually put on trades. I don't know if they actually put their money where their mouth is. I don't know if they're actually able to make useful decisions in the markets. I know this is kind of a tongue-in-cheek thing I want to start the live stream about, but this is actually important. And I was digging through some of my old social media. See, before 2020, I got into the whole trading, day trading Discord scene. Before I started my own, I was a member of local groups, people that would meet and talk about investing. Back when we used to like meet in person with people. Do you remember that time? Maybe you don't. But there was a time when people actually left their houses and went and sat in front of each other, like face to face, like in the same room, and would have conversations about things instead of sharing funny memes and text across Discord with each other. But unfortunately, we can't remember those conversations, but that we do actually have some records. There's an old Skype room that I was in, and there was something very, very key that happened back then. Let's bring up the ES right now to talk about the stock market in context. And by the way, I'm going to go through this and then we'll do some market updates. And as always, I want you guys to post any questions or symbols that you want to look at in the chat. That's where we as viewers, we look at stuff and find opportunity, like Netflix from a few weeks ago, and like everything else. I mean, I've got my positions that are wrong, but let's face it, the market's kind of slow, so we need everybody to say, hey, come look at this. Is this a possibility? And there's a few this week that I want to look at and talk about as well. But let's go back to basically the day that the market turned back. I remember it was March 24th. I can look at it without even really looking at it. Well, there it is on the chart. I can find it. But I said this is kind of like a little tongue-in-cheek indicator back then. And yes, this is entirely anecdotal. This is not scientific. I am not a PhD economist. But if you remember back in COVID times, what happened was in the March where things were really bad from COVID, if you went to the grocery store, things were out of toilet paper, lots of key things that people wanted to stock up on. People bought off the shelves. Our supply chains were disrupted for about 2 or 3 weeks, and things were really, really dicey. And it's no wonder that that time there was so much pessimism inside the economy that the stock market went down, because the stock market is a reflection of people's views about the future. Price is essentially emotion on display. And I had this observation on the 24th. Yeah, get your symbols into the chat. Yep. Hey Casey, what's up? Oh Casey, I saw something today that I wanted you to look at. I'll see if I can find it again. I think what I said on March the 24th was I think we might have bottomed, because I went to the grocery store and they had oatmeal. Now, oatmeal I eat for breakfast every morning, and it was gone for like 3 weeks. Fortunately, oatmeal is something that I have several of those, Quaker Oats cartons of, and I finally saw it in the grocery store again on March the 21st. Totally just esoteric, just what happened, but that was a sign of things returning to normal. It was a little sign for me, but it was part of the broad supply chain disruption coming to an end, and things kind of returning. But the problem is that when people get into the mindset of negativity, or even positivity for that matter, humans tend to think that the recent past is going to continue. And then you have the contingent of people that are just constantly putting out charts about how much debt the U.S. government is in, how much money the Fed has printed, how much the repo market is doing. I don't even know what that is. But I don't really feel like I need to, because the people that focus the most on that and educate them the most, I don't think they translate that into useful opportunities for investment and making money. I don't think that knowledge is valuable at all. People think it is. People think by scaring themselves with whatever's the current crazy thing to be worried about, they think that that's going to make them some money, that they know, oh, I know this, or it's like the tiger in the bushes. That's what's going on. We're trained like by our genetics, our ancestors. If they were like, hey, there's a tiger in the bush over there. If our ancestors said, oh really? Let me go check that out, we wouldn't be here. So we're very attuned to that kind of fear. And I don't want to throw this person under the bus. And I'm gonna go back and look this up. There's a friend of mine, a real life friend of mine, that at that time in that same chat, in April, as the market started going up, he kept on posting about, let's see, this is about April 15th. Where's April 15th? So April 15th was right about here. And I remember we were basically bouncing off that low. And this guy, imagine this, you probably know somebody like this on Twitter or on just Discord. He's constantly posting charts about it. And here he said, I stand back in amazement that people are buying the SPX at 20x earnings. I mean, this is April of 2020. I mean, yeah, this is hindsight, but still, in that moment, he didn't want to make any things because he's just constantly criticizing the economy. I'll compile these together because this is really important. This is when I talk to my close friends and I talk to you guys about discounting the negativity, discounting the FUD. This is one person in particular that really sticks to mind because this person, throughout the years, almost a decade that I've known them, they have been way too pessimistic to the point of their detriment. I mean, would you like to go back and buy the SPX in April of 2020? I mean, think about it. Like, yeah, it wasn't apparent to us at the time that the market was going to do this. It wasn't going to have the most bullish year in history, by my estimation, 2021, because it was pessimism. But what you need to understand is that age-old John Templeton expression. Bull markets are born on pessimism, grow on skepticism, mature on optimism, and die in euphoria. Well, 2021, NFTs, crypto, stocks, all euphoria as it climbed and climbed and climbed. And then, well, we had 2022, which was more or less inevitable. And we are essentially now coming to retest the all-time high. And we've had a couple of bearish weeks. But does that mean that it's all over and we are now seeing the little pop? I think the most probable answer is no, things will be okay. And I think you have to start from that baseline and not that there's so much bad news out there, I have to assume the worst. I have to do drastic things to protect myself out of fear. Because on any given year, there's always something bad happening. There's always a certain latent doom that is purveying the market. And you can't let that get to you. There's plenty of opportunity out there. There's been plenty of opportunity this year. The best opportunity was when, I think it was the scariest point, which was in March, when all the banks were going to fail. Well, they didn't. And if you actually took some time to analyze like why these banks, this was knowable. This wasn't PhD economics, kind of information that you need to know or speculate on. You need to look at why the banks failed, because their balance sheets got all out of whack, because they owned too much 0% or low interest rate bonds, and they were heavily concentrated in tech, which was taking a big hit because it was being fueled by a lot of this zero interest rate stuff. And their loan to deposit ratios fell below a certain percent, and the FDIC came and said, you're no longer a bank. That's why those things happen. For, was it 2 or 3 banks? It was 2 for sure. 3, I think, is kind of in limbo still. But that was March of this year, and that was a pretty damn good place to get into the market. Now we're going into, we're close to, but not quite into, the second most interesting time of the year, as the beginning part of the year is the most interesting. The end of the year, that Santa Claus rally. Also the October, which is for superstitious traders, when all the bad things in history have happened almost. So it's going to be very interesting, but there's always going to be opportunity, whether it's on the long side or the short side. And I'm going to hopefully help you guys to find it. So, All right. Got questions? Let's look at them real quick. We'll do a quick go through on the questions on Discord, TradingView, and YouTube, and then we'll do the market update because usually I end up trying to pack it all in at the end. So let's take a look here. Yeah. All right. Sounds good for everybody. It looks like. Let's see. Tax conversations. What kind of tax conversations do you want to have, Swaggy? Oh yeah, I did do that. I did look for pomegranates. Well, now the good ones are in season actually. So, all right. All my cash in my pocket and it ain't going to grow and due to pessimism. No, but it can grow at 5% if you put it into a savings account. Believe it or not, that's a really smart thing to do. Don't tell crypto bros that who tell you to DCA into Bitcoin. They don't like to hear that. If you're not, you need to be buying Bitcoin with that cash so that you pump their bags. All right, let's see. So actually, someone talked to me about SoFi this week. As a matter of fact, they were trying to sell me on it as a novel concept. And yeah, that's true. That let me kind of rehash the conversation. So he was talking about how it's really unknown to me why there's still brick and mortar stores. A lot of that has to do with boomers. Um, Seriously, I know in one particular case, I have a friend that's managing the money for their aging boomer parent, and the boomer parent is too afraid to do anything online. And so rather than go and try to convince them that no, there's this thing called the internet and it's safe, even if something does happen, you have recourses. You go to the bank and you say, I was defrauded. It may take some time. It may be a headache, but you're not actually going to lose any money. They'll take care of you. That's what the traditional finance system is built upon. And but instead, what they do is they actually have this aging parent write checks, and so that they feel like they've written a check to pay someone, like a bill, and then the child, who's a generation millennial kind of person, knows how to do. They just go pay it online. They tear up the check and pay it online, and that makes everyone happy. Saves time, but also, it's just easier. It's just unfortunately easier to do that. But they're not going to be around forever. So I'm not exactly sure how SoFi fits into this. My friend was trying to tell me that they are trying to do away. I mean, they don't have any brick and mortar banks. They're trying to be an entirely online bank. And that's good because I think pretty much everyone does things online. How that translates into stock price go up? Well, fundamentals are not my bag, baby. Technical analysis is. And so what I'm going to look at, like I look with anything, is I'm going to see what happened in this 2023 bull run that started in May, which SoFi did have in May of this year. Nice little bull run. Topped out in July at about 1170. And that gives us something that we can chart. And it initially in August came to this level. You can see it $8 a share. It has a very nice inflection point here. But today, this week, but really today, oof, it's broken that level. I would not say that I would be stopped out of this if I were in this. I'm not. But you need to be very careful that you come Monday, you need to be watching this and not let it go too far below you. What you want to see is maybe this be a dip and it recover and continue up. But if you have a situation like so and come down, yeah, you need to hashtag this is not financial advice, but from a technical standpoint, looking at what price does at key levels, how it holds it, how it breaks down, that's everything I do. And I'll tell you something, I've got a very painful thing that I had to do today. I had to actually cut a winner from earlier this year. Actually, it was brought up by Swaggy. Swaggy here, he's a big fan of RCL cruise lines, and I think he cut his NCLH, which was good. NCLH was my choice. I'm not going to say I'm the best at picking them. Obviously, RCL has done pretty well. RCL has a nice, solid trend going all the way back from 2022. It's good. You don't need to worry about RCL just yet. But NCLH that got into back in March, I did. Very sure I posted on trading view as well. Had a nice little bull run here, but notice, let me clean that up a little bit. When it got to its 50% level, when that trend got to the halfway point, it broke below it, just like we're seeing with SoFi, came down and gave ample opportunity for me to get out. I did not. I waited for my stop level. The reason I did that was because I'd already taken profit here and taken profit in here. Didn't take profit here. Nobody's perfect. You're not going to get the tippy top. But after two take profits and a very small position, at that point, I can stop out and I still have basically the same more than a 3-to-1 that I had started back here. So forget all that trade stuff that's unique to my trade management. The key thing here is what price did at this level. It came to it, it broke it, came down to test it as resistance, and held to go down. So objectively, and I can be objective because it's already a winning trade, I'm not worried about trying to avoid taking a loss by holding on to a loser. I can objectively say, all right, that trade's done. On to the next one. My money has a better return in something else potentially. And so with SoFi, what you need to watch out for is that situation right here. It needs to recapture 8. It needs to get back up there, get you a daily bar 2, ideally, to close. It's down 5% today, so I can understand why you'd be asking that. It's not deadly. It's not deadly yet, but don't let this thing go too far against you. And yeah, if it does, it gets into this area right here. I call this area where you've broken the level, you got a low right here. This is, of course, if you guys watch the live stream, I call this the Valley of Risk with my awesome trading view writing skills. Yeah, that's where you just don't know what to do. But right now, you're still in a position where you know what to do. You're sitting here watching that 8 level and seeing if price can get back to it. All right, let's see. Look at the other ones. CHPT that you put in. ChargePoint Holdings. What do they do? What does ChargePoint do? Is that something having to do with EV? Let me bring up Yahoo Finance. I look at everything technically, but I do sometimes want to know what a company does. I know that used to be really anathema for me to say something like that to people, but now in the current day and age, especially the audience that I have since 2020, the day traders who are not going on fundamentals. Now people, fortunately, don't put so much stock in fundamentals. One time somebody asked me, so if the price of, garbage was going up, you'd buy garbage? And I said, yeah, I own Waste Management. I have owned them for a very long time. Let's see. ChargePoint Holdings profile. Yeah, it powers electric vehicle charging networks. Okay. So number one, I don't see any try to get off these lows. Let's look at a little bit of history though to kind of learn from this example. And while I'm drawing that line, let me just say that as a Tesla owner, I am a little bit elitist, because I think Elon's doing great things. I think that the Tesla charging network, the Tesla supercharging network, is fantastic. It is covers the United States very well. I don't know about other countries or places, but if you have a Tesla, you can take a road trip. When I first bought mine, I took it from Georgia all the way out to Denver, Colorado. Yeah, I had to wait about 20 minutes and get some lunch a few times, but it was great. It was great. It works. Cars that do not have that ability, they do not have level 3 charging ability, why would you buy one? But the point is that I think Mercedes, Ford, and I don't know if GM did or not, but I know Mercedes and Ford have already contracted with Tesla's supercharging network to be a part of it. The major car companies are starting to adopt the Tesla supercharging standard. Basically, Tesla won. I mean, I remember stopping and at a hotel, and they said they had free charging, and I go to it, or not free charge. They said they had charging. And so I went to that hotel and I saw a charger there for EVs, and it was going to take my credit card. And I just said, nah, I'll use the Tesla supercharger, on my way out tomorrow morning. Not a big deal. I'm not going to give this charging station business. So no, Tesla won, Elon won. Like, no, I mean, this is and that is reflected in the price. And when you had an IPO back in, what is it, 2019, you had the whole EV craze, which popped it up. I really hope that as I'm speaking to you, that you're not an owner back around here, and you're asking me now what to do about it after it's broke below its pre-IPO price. I'm sorry if that's bad news, but no. I mean, what you had here back in May of 2022, last year, was price came down to the lowest low it's ever been, which I guess is 938, and you had a rise off that level. This was a tradable instance that I would look at when I look at things like this, like we were looking at SoFi, which is coming off of a bottom. So let's just analyze what happened in this bullish trend that happened off that level. So you have a nice significant bullish trend that's actually going to break a prior high. It did break a prior high, didn't it? Oh no, it actually didn't. No, so this thing's just been bleeding out. Oh my God. Guys, if you're watching this, like, don't bag hold. Don't bag hold. I mean, so often I can't even find a good like, this is so textbook. You have a big pump, it dumps, and then you have this, this move up right here where I wish I had the meme. I need to have like a meme folder here where I think that I saw about a few weeks ago. It was like AMC holders be like, red bar, red bar, red bar, red bar, green bar, with the bald head, meme face or whatever, Bojack. Yeah, every time you have something like this and people are following it, they see every single one of these pumps as like, yes, yes. But objectively, it keeps making lower and lower highs. But it's so difficult for somebody to say, all right, fine, I'll take a 50% loss. All right, fine, I'll take a 30% loss. All right, fine, I'll take a 80% loss. All right, fine, I'll take a 90% loss. It's painful, but I don't even see something I can chart here. I guess what I could use is maybe the last pump that it had here. So there is your 50%. Let's look at it that way. So comes down, holds it, bounces off of it, and then once you have that's kind of dicey. When it closes below it, you might get it. No, it's just this isn't a good example. It's just a company that's bleeding out. So no. Buy Tesla stock. Actually, yes. Just for solidarity, I hate dollar cost averaging, by the way, because I want to look for setups that I think are going to give good risk reward opportunities. I bought Tesla at the 50%. Been waiting patiently for basically 2 years almost to put a major allocation on Tesla. Bought it in May. Then I bought my own Tesla in July. Loved it so much. Unfortunately, it was here. And part of the reason that I bought it was because of the incentives they put out there that quarter to get it sold. And that made their results really freaking great, which made the stock price go up, which is not a buy. But I've been waiting for another opportunity to get more. Haven't really seen that 200 that I want. May not get it. So I decided to dollar cost in here at the end of the day on this 50% at 245 right here. So when you're looking at something from a bag holding perspective, like that, or what are some others like Plug Power, all the darlings of yesteryear. Yeah, I mean, look, Elon won. Like, don't bet against Elon. You don't have to bet with him. You don't have to. But you need to ask yourself, where's my money going to get a better return, long-term return? Is it going to be holding on to my emotion to not take the loss on liquidating this bag hold? You know, that if you, let's say you put 1,000 in and it's down to, $150 value now, you're probably still better off with a 5% year over year with a savings account. I know that's like, it sounds like horrible to say, but it could go down even more. It could be worth 50. Or you could put it in Tesla, which is the standard and the charging standard now. And yeah, it's going to go up and down. But where do you think you're going to be better off in 10 years? Like, do you really think that Tesla supercharging network is going to go away in 10 years? Or is it going to be less used than these upstart charging ports over the next few years, which are dependent entirely upon people charging with their credit cards, as opposed to Tesla, which offers their supercharging as incentives for buying their cars, of which you see a lot more on the road than any other EV? Maybe I'm wrong. But that seems like the simple explanation for me. So, all right. Tech. What is tech? Tech resources. It's going up, but dicey price action. I don't really see a good 50% in it. This is a daily chart. Is it a good example from March of 2020 up to the all-time high? Look at that. This is why I look for 50%. Boom. Even, oh man, you're getting me excited. Great example here of when price hits a 50. This, by the way, if you've been watching my live streams week over week, you know that this kind of price analysis is what I use day in, day out to find opportunity. It's very simple. You look for a trend, pulls back to 50%. That means at least half the people still own it. Yeah, that's not a way of putting it. And that also makes one patient to wait for pullbacks, as opposed to what people, I remember doing back in February of this year, FOMOing into Tesla. Sure, if you bought it in February at $200, you're doing a lot better now today at $245. You are. Yes, you are. But being patient and waiting for a 50% pullback, that's what you want to do. So tech, I don't see that now. And so I'm just going to say no to a position now. I want to see something a little more clear. But July of 2022, I know it's in the past, that was very clear. But we can learn from it, and that's why I'm saying it. It's not just to say like, oh, look, you could have done this here. Yeah, you could have. But this is what Netflix is based on. The Netflix, which I talked about here, which is a short that was basically crowdsourced, it came up to a major weekly 50% from the high in November of 21 down to the low of May of 22. That's the level, the 50% retracement that it hit in July, spiked out, and it's coming down off that level. Flip it over, go back to tech. The reason I was getting excited about it is because on this July of 2022, this is what you want to see. Put this in your brain. Look for this. Draw your major weekly 50% level. Let's get it perfect. That's the high. All I ask for is perfection. In my pomegranates, in my charts, in my renovations to my condo, all I ask for perfection. And hits the level, and then if you're even more patient, see what it does. See, I want to wait for confirmation. I want to see price come off of a major support or resistance, in this case support. And this little red line that I have in here, it is a shorter term 50%. It comes from the Ichimoku indicator set Tinkinson. If you put Ichimoku on your charts, you'll notice that that little red line, or whatever color you may have it, is the 9 period 50%. I use it as sort of like a trigger. Everything that I do is based on 50% and false breakouts. And so what I want to see as the first sign of a trend ending is price closing above or below that Tinkinson level. And so what you had right here on July the 19th, 2022 is the first actual technical close of it. And then what you'll have is the first little potential reaction. And you want to, what you can do is you can look here and you can say, okay, this is going to be my actual entry point. Look at it day to day, maybe even as a day trading setup. And there you can look for a very low risk entry. How I would have played something like this? Well, the first target to recapture is going to be the 50% up. And the beauty of this is if you wait and patiently for a setup such as that down to the 50%, your target is going to be the 50, and then you're not going to let it break the low. Give yourself a 3-to-1 and see what happens. It's going to hit your first target, and you're really playing a larger, wider 50%. And so you're going to hope for it to retest that high. And therein, see here, that's why it's actually really important to take profit on things as they go along. See, in this kind of case right here, if you took profit of that 50%, now you've cleared your mind of such a big position. And it's even holding it, giving you reason to say, okay, that's a resistance. But if you stay and you have a much less position, you're less worried about it, you can sit there and you can wait. Ah, look at that. You guys see that right there? Spends a little time above it, comes back down, retests the level to hold it, and then up it goes to the high. And at the high, if you guys have been watching my live streams, I talk about this every week. You know, the 50% and false breakouts. You know, Nvidia is doing this. See, I'll relate this to a live example, and we'll go back to it. So Nvidia on the weekend, I've been looking for a short in Nvidia. Still haven't taken it yet, but looking for a short Nvidia because I've already got it marked up. Let's clean it up. So they had that really great earnings 4 weeks ago, or 5 weeks ago. And so you had the prior all-time high before earnings was right there at 480.88 on Nvidia. And then earnings comes out, punches above it in that day, but by the time the week closed, it failed to follow through. The following week, made another try, closed a little bit higher, gave me a little bit of question. You know, let's be patient. But I really want to be short Nvidia. When you see something do this, comes up to a major high, tries to break above it. Think about it. Traders are trying to push it higher, and they can't. There's just not enough buyers. They fail. It's a false breakout. That is the sign that I'm looking for there. And then now let's go back and use our little educational tool here with tech. So tech did exactly that. There's that all-time high that it set in June of 2022 at about 45.90. Did a little spike above it right there. Bink. Actually, that's earnings. Oh, no, earnings are coming up. And then look what earnings does. Opens above it, closes back below it. On the weekly, you can see it very clear. That is how things top out at highs. Look for that. Seriously, just look for that when you're in a position. Look for that in other stocks because that is going to be a really good sign. Look, people are always asking me, when do I take profit? What do I do? Well, then. And yeah, we can go forward and we can see that it goes up. But from a trading perspective, that is what's going to tell you that something's going to reverse. Or let's say that you're not long and you want to short it. If you're a bearish person, you want to short at that high. Like I'm looking at Nvidia, which has been super bullish, and you want to be contrarian. That is a sign. There's money to be made in a short off of a false breakout like that. And where it come back to? That same level. There's your trade right there. There's a short trade. So 50% and false breakouts. Outside of that, I'm not that interested. Because those kind of setups have such a good return, a good risk reward. It's telling you where price is likely to turn around. You don't have to take such a big drawdown. You don't have to sit in it and wait. It sets up trades. This is gobbledygook. This is... See, it's just not as interesting as this. And so what I'll do week in, week out, sometimes the market gets boring, and sometimes I need y'all's help to share. By the way, links below to the Discord. If you have questions intraday, like, hey, what do you think about this? Share it with us. We'll take a look at it. this is what I want to look for. But right now, tech, it's really just an educational opportunity. As far as being a buy, you see what I mean, though? I really want to have a setup that I can get behind, like a 50%, like it did here, or a false breakout. Those are the two things, or better yet, like with Netflix, combine them together, a false breakout. A false breakout at a 50%, like it did in July, did a little spike. That's the kind of thing that I want to take on. But yeah, please continue sharing charts. If you see something like this, what I want to do is I want to teach people to train you guys to see it for yourself. And then if you want to come back to me and say like, hey, look, does this fit the qualification? Like a lot of people do this on Discord. Someone actually asked today, have a specific channel just for that. Oh, do I charge for the Discord? I do not. I don't believe that. I make my money off trading and investments. So someone asked about, what is it? Pins. Oh, Pinterest. Oh, yeah, we were going to talk about the Becky Index. What time frame is this? Daily? Yeah. Yeah, so they were asking, is this false breakout spike a good one? The problem with this is it does not have a good risk reward because you need to have that stop below there. And that high, excuse me, is only about a 2-to-1, even less than 2-to-1. So no, this is not one that I would take, but it could very well be a 50% hold there. I have rules, and my rule is that target needs to, you need to be able to gather 3 reward inside that entry to high, and this just doesn't give it to us. But that's a good question that we had in Discord yesterday, actually, and I was able to answer that like, probably not. Probably want to look for something a little bit better. Okay, on to more questions. Let's see here. Actually, let me go to the questions in a second. Let me just do a quick market recap because, yeah. Oh, you guys have been keeping me very talkative over the last couple months, actually. I was just getting a question from my girlfriend. It's like, wow, you've been going up about 2 hours on your live streams. I'm like, well, if you guys keep me talking, I'm here to help. So the big thing I'm looking for on the stock market right now is 43.50 on ES. Let's use SPY because a lot of people like to see that. Basically, SPY is a little bit different. So, and this actually happened, let's see, yesterday. I know what happened. So you need to use adjusted for contract changes. This is a new thing that I kind of noticed this week when I saw that discrepancy. So August the 18th, I've been looking at as a key level. This is where the market turned back in August. And so market entered bear trend today. Yesterday it was still in the momentum for Ichimoku. And by the way, you'll see me overlay Ichimoku at times when I'm doing analysis of trends, whether it's Bitcoin or the stock market broadly. I try to be as objective as possible. When price closes below or above the cloud with a matching momentum or lagging span, as it's called on TradingView, or Chikou, as it's badly pronounced by me from the actual indicator name. When you have these two things happen at the same time, that is the sign of a confirmed trend. And so right now, as of today, on the daily chart of the S&P 500, it has entered a bearish trend. So we have to note that, and we have to acknowledge that. SPY, though, has not quite broken out, but the ES futures have. I'm going to clarify that with you later because I trade. Well, I haven't been taking many recently because the market has been so thin. But let's wait until next week. Let's wait because of the discrepancy. Because for the longest time, I have been doing it on the unadjusted, and we're still in the cloud. And then when I look at, and by the way, the reason that is because different futures have different expiry months. And what TradingView does when you do ES1 exclamation point is it it chooses a futures contract for you, and those are going to be different based on time horizons. And you know what? This has not been a problem in the past. I'm going to find this out because this is something. Hold on. I'm going to speculate the reason for this is interest rates. I do not have a PhD in economics. I have to actually go and educate myself just like everyone else. But this has not been a problem in 0% rate because what happens is in order to take on futures, you're essentially taking out a loan. That's the margin you take out. And so if you have a 5% year interest rate that you maybe pay in the brokerage or that is built into the futures contract, that's going to be affected if you have a futures contract going out about, about a month or a month and a half. Take that 5% divided by 12. It's not zero. What's the difference actually between these two? What's the difference between the current price of ES? And notice this week. This is actually really important. Hold on, let me work through this with you guys. So the current price is roughly 43.60, and then adjusted is that's 43.60. So that's really messing me up because it's basically taking into account past month's contracts. I'm going to get to the bottom of this right now. Margin getting called, yeah. Did Margin call you this week? Margin calling. Or I tell you what, do you guys know the answer to that? Do I need to find this for you guys? I really need to find this out for my own because I'm going to sit here and do a market analysis for me and you guys, and I need to have a consistent metric. Lacking that, let's just do this. Let's just do S&P 500 index. Okay. That's what we're going to use. All right. S&P 500 index, SPX. All right, so what's the index itself? No, that's the index. That's not just SPX. They're both the same. Hold on. Index. Indices. CBOE. Okay. SPX. So, SPX looks like this. XPS has not entered a bearish trend yet. And that is going to be most like the unadjusted contract. I don't like this though. I don't like how you have this high and this high going higher, but then on SPX, they were lower. I feel like I would have observed that last week. Okay, I'm going to get rid of my confusion. Don't worry about it. All right, continuing on. TLT is almost to my stop. These are bonds. I will have to puke them if they break the low with some significance, but this is an example of doing my 50% trade, and hey, what do you know? Things don't work out all the time. VIX, volatility index, which is inversely correlated to the S&P 500. The next level that I would look for a potential actual market bottom might be around 22. So we'll keep a look at that. Not much movement in the VIX though. Gold still remains short from May. That's when it did a false breakout. Head and shoulders, triple top, whatever you want to call it. Mainly it's just a false breakout. Oil. I think some people are wanting to start shorting oil. I'm not sure why. I don't think I agree with that. I think that really it needs to come up to 93, more like 97, because ultimately oil held its key level of 65. I'm using crude oil futures with 0 as my baseline there for analyzing that, but I think oil is going to continue to go up. It's still going through this 50% pattern. Probably going to try to retest the high, honestly, but when it gets into this range between, let's call it 93 and 97, maybe in a week or 2-3 weeks time, we'll start looking at that maybe short as a hold of that 50%, but not yet. Dollar index higher again this week. Again, it also held its 102 key level. Interestingly enough, a friend of mine, well, my contractor who is from Mexico, pointed out to me that while the dollar index is going up, the dollar value ostensibly is going up, the index itself, the DXY or the dollar index, is based primarily on it's Euro USD, but let's do USD EUR to kind of see. It's basically, it makes up about 70% of the dollar index because that's what makes up most of US dollar transactions internationally. And so that makes sense that the chart looks very much similar. But interestingly enough, the dollar Mexican peso, that's really bucking that trend. In fact, it's over the course of basically the last year, that has fallen off precipitously. For a currency, 17% is a big move. And so that's going to be an interesting thing to watch, actually. That is actually, as I think, if I had to give a narrative to this, it's China trade tensions. And I think it's just becoming more profitable and safer for countries to invest in Mexico to offshore their goods, even though they're not offshoring. Most trade happens between Canada and Mexico, NAFTA countries. So, all right, Bitcoin. Bitcoin continues to get caught in between 50%. Bitcoin over this year has been a textbook case of price holding 50% levels. I've had many arguments about how technical analysis is bogus and completely useless, and you just need to buy their coins from them, or rather, no, not their coins, buy coins so that their back goes up. HODL, in other words, and yet Bitcoin held a 50% in March, held a 50% in June, held the 50% to go short in July, and then once again came down for about a month and stuck around that same 26,000, 50%. And then what do you know? It came up this week. There's a little bit of hopium in the air, right to that 50% of the down move, the Elon, rumor sell-off, SpaceX sell-off. I think it was. They were holding on their books and they decided not to, and held it as resistance. And so it continues to be a textbook case of why technical analysis is useful. Not if you listen to the memes. If you listen to the memes, people are complaining that, oh, technical analysis is horrible. I can't trade because I bought it here when everyone on Twitter was saying it was a good buy and now it's down. Oh, you can't trade Bitcoin. Well, yeah, if you follow what Twitter's saying about Bitcoin, you're going to be massively misinformed. Watch the 50%. And so basically it's held a resistance. And now we're going to see if it comes back down here and does its little thing. But just as I would be presuming with Netflix that my target is going to be here on this short off of 50% or possibly to retest the bottom, just as I'd be assuming that with Bitcoin, the same still applies. I still think that it needs to come down to its 50% and then possibly retest the bottom as well on a pure technical analysis perspective. Not much more to it. Ethereum has actually been losing a little bit more. I found it very interesting this week. I was looking at the Ethereum Bitcoin cross just over the last year. I know that Bitcoin market dominance has been going up. Someone last week asked about it. I don't know how to trade Bitcoin market dominance. I can only know how to trade price. But Ethereum has actually been losing a lot to Bitcoin, more and more and more. It's I find this very interesting. But what I also find interesting is even though I've sort of gone away from my whole privacy is going to be a valuable use case of cryptocurrency, Monero, which during the bear market actually outperformed Bitcoin back in 2022, it has remained remarkably stable to the value of Bitcoin, around 5.3, 5.5, 5.6, or excuse me, 0053 to 0056 in this little tight range, whereas Ethereum has been losing. Monero has been holding. And that's because I really and truly believe that Monero privacy is the real use case of cryptocurrency. Now, if you talk to Bitcoin maxis, they're going to say that, well, Bitcoin's Transparency is its value. But I don't know. I gotta go with my gut on this one. Monero is used in shadier circles of the internet, but it is used. It's used as an actual currency. And wasn't that the point of cryptocurrency? Crypto, cryptic, mysterious, unbreakable, untraceable. Currency used to buy and sell goods and services. It's kind of the only thing that really I think fits the use case for cryptocurrency. Not saying it's going to Lambo Moon, but it's still remaining a good store of value versus other cryptocurrencies out there. You know, if you look at Monero over the last couple, big wide range, but a range nonetheless, as opposed to, I think someone was asking about Litecoin, which was supposed to be the alternative for Bitcoin, more useful because it was quicker, lower transaction fees. Broke its low a few weeks ago. It's a crypto winner. I don't know when it's going to be summer again, but if you really, really want to survive it, you gotta stick with the things that actually have use cases. And Bitcoin has its religion, Ethereum has its smart contracts, and Monero has its primacy. I think I read an article this week that NFTs are down 95% from their highs, with many, or 95% of NFTs have a $0 price on them. Sorry. It's a good idea. It just came around in a zero interest rate world in a hype cycle. But I'm sure your monkey pictures are meant, they're really valuable in your heart. All right, back through it, and then we'll get back to the questions. Amazon, trade of the decade, or trade of the century, as it were. Down a bit, but let's see. Do we want to add to this position? Where would we do that? See, this time in the market where we had this big, nice, bullish run that went all the way from March all the way up through the summer. Now we're getting a pullback, and everyone's like, ugh. No, this is the time that you start looking very carefully at the winners of the year for a pullback during this fall cycle that will then go up in the Santa Claus rally. Nothing's guaranteed, but this is the pullback that may be the last one before the end of the year. It could also be the end of the world. Sure. But more than likely, this is going to be the pullback that takes us to the all-time high on the stock market. Look at the winners this year. Look at the winners of this year. Amazon, is it going to come back to 113.65, the 50% of the January to September high? We'll see. We'll see. That's a nice level. You got a nice little earnings high there to back it up. You got to set an alert at 114, maybe off base it a little bit at 116. Set an alert at 116 Amazon. Just set it. May not get there. Set it anyway. Activision had some news overnight. The thing that was holding up, the thing that created this stupid little move right here, I say stupid because this is my merger arbitrage trade from, was it 2 years ago I put this on? It was about right here, so it was about January. Yeah, more than 2 years I've been waiting on this thing. Long-term capital gain stuff here. So I think I bought mine at about 78 on that pullback right there, and had to sit here and wait for all these governments to try to figure out if game companies were a monopoly. I mean, I don't even play games that Microsoft or Activision makes anymore. I play games made by indie developers like Valheim. Love Valheim. Finally, they got some little bit of clarity that the UK is probably going to let them finish their merger, and so it's going to end up being finally a good trade. The reason it's a little annoying is because I did it with some options, like some longer-term option call spreads to kind of be cute in addition to the shares. But the shares are going to give a 19% return over the course of, what's this going to be, 2 years probably, let's say. So 11% return over 2 years. That's the kind of thing that merger arbitrages typically kind of are. But of course, there's that risk in there with all this headache. Whereas if you just wouldn't have followed the news and just let it play out, it'd be fine. But we're almost there on Activision. Caterpillar is another winner this year. Draw your 50%. Are we gonna? Well, actually, I think what you want Caterpillar to do is pull back to the 266, which is that all-time high, and possibly hold it. Kroger, going nowhere. MetLife continues onward. NCLH, had to cut it, so it comes off my list. It was a good winner, but Home Depot. Home Depot. This pulled back yesterday to the 50%. So I had an alert, but I think I forgot about it. So there you guys go. Look at Home Depot going into next week. Look and see if we get some kind of a turnaround in the market, specifically looking at Home Depot. Home Depot, the broader price action is it's holding this 280 level. I picked it up in a trade, posted on TradingView around earnings back in May, when again it broke through and then closed back above inside this key level. That's Home Depot right there, but it's now from this trend pulled back to 307, 306. There we go. Truist Financial laid off a bunch of people this week, I think. Still a good dividend play. Tesla, like I said, this was another 50% pullback here to 245.67. There's two winners this year, Home Depot and Tesla, that had pullbacks to good levels this week. Rivian, and I think actually, yeah, this was another one. Looks like it's coming all the way back. Hopefully it doesn't come all the way back to 1986. And Palantir, I know that someone asked about Palantir earlier. I'm still looking at 1308. That's going to be the 50% of the big move that it did. Be patient. I know that a lot of people are like, it's at lows. Just let it come down to here. Just namaste. Let it come down there. Netflix short, Nvidia I want to short, we'll see. All right, that's the quick run around. Let's go back to questions here. And we got to look at Casey's, of course, this week. You put it XOM? You put it ExxonMobil? I would much rather you own shares in ExxonMobil. Yeah, I saw. That's why I kind of wanted to talk about that, because you guys said that. I saw that in the chat. You guys were shorting CL. Yeah, it's not bearish. It's just not. I think it's just kind of maybe a guess, kind of to throw some bait at a short. But if I was going to do that, I would wait until you get up to like 94 or something like that at least. I mean, it's. Do you even have a Tinkinson close? No. Oh, no. You're not following my rules. See, like yesterday on CL, it got below it, but that daily bar on Wednesday, it came down to the Tinkinson, held it, and it opened below the Tinkinson. But let's see, the Tinkinson is 89.57. The close is 89.63. Ugh. That's 6 pennies that it did not fit the rule. And I know it's just 6 pennies, but I don't have the rule because it's right all the time. I have the rule because it makes one patient and forego things such as this. I'm not sure how you got your ass handed to you, though, if you shorted because it was down today. Maybe you shorted like in here or something like that. The idea was the indices were rallying in the morning, so CL looked like it was good for a pullback. Even the relationship of stocks and bonds has really come into the question over the last few years. So I'm not really sure that I would trade oil because of stocks doing thusly, unless it's on a very long-term basis, or unless you have research that leads you to believe that there is a very strong intraday correlation that you're banking off of. So can't agree with it. All right. Dollar General. Have we talked about this? Yeah, I think you've been in Dollar General, haven't you, Casey? This is one I know we talked about this last week because I've already got this. Oh, did you short this last week? This was a good short because this is again from the all-time low from when it started back in 2010 to the all-time high April of 2022, pulled back to its 50% level of 140, and just tanked it. Yeah, that's a break of the level right there. Who isn't in the Discord? I like Dollar General. Can you help me understand how the Fed pausing interest rate hike? Yeah, actually, I was actually going to talk about that today, Dom. And actually, I know you asked that an hour ago. I'm just now getting to it. Let's see. I actually have that. Let's talk about that. Nope, not my pomegranates. There we go. So I have had several people ask me this question. Dom, can I reply to it? I'll tell you I'm answering it now. Are you still here, Dom? I'm just curious if you still are. If people ask questions and I don't answer quick enough, I want to know so that I can kind of maybe change my tenor, my cadence a little bit. So here's the statement, and I've had people ask me that same question, like, why market go down? Well, the key thing is this. The key thing is this. This is the sentence that the whole market hinges upon, apparently. Now take this with a grain of salt, okay? You know, whenever the market moves, the news media has to, they wake up in the morning, they put on a suit, maybe they take a shower first, maybe they get some coffee, and then they go into work, and their job is to fill content with things that people will read, more importantly, so that they can put advertisements in between that content, or they produce videos or segments, or they make tweets that, again, have advertisements and commercials around them. But they have to put something there to have people wake up while they're drinking their coffee and consume this information so they can be made aware of what's going on, or at least feel they are, but also take in the commercials. And so they're going to harp on these things as why the market went down and make you walk away feeling like you've been educated. But the reality is that you don't really know. And in my opinion, and in my experience, the best way to know, the best way to go forward is to use price action analysis. That's truth. But I'll explain why. I'll give you the meta answer for why the market went down, why they would say. And it's this sentence right here. The committee would be prepared to adjust the stance of monetary policy as appropriate if risks emerge that could impede the attainment of the committee's goals. That goals being the committee seeks to achieve maximum employment and inflation at the rate of 2% over the longer run, which is always the Fed's stated goal. You know, that's always what their baseline mandate is. Employment, 2% inflation. Maximum employment, 2% inflation. During COVID, they bought a bunch of corporate bonds to lift up the stock market. They kind of took on a new role, a de facto role of keeping the stock market up. But they didn't do that in 2022. They said, nah, we're going to let it play out, which is good for, market forces to prevail. But this is always their stated goal. And so what this means is they're willing to raise rates more. And interest rates they did get us out of COVID and give us all that damn good bullishness that people had enjoyed for the last several years. Easy money got us to where we are. That's the only reason we're there, if you ask some people. And the idea that we're going to turn off that spigot by raising rates even more. The reason things have been going up so much this year is because the Fed has been very clear about how many rate hikes they were going to do. They've been saying all year they're going to do X number of rate hikes to get us up to the point we are now. Now we're here. Now we're where the Fed said that we should be last year. They've done everything they said, exactly as they said. They haven't done any surprises. But to then come out and say, well, you know what? If we don't get inflation to 2%, we may raise even more. And that's on the heels of last week's CPI print, which was about 0.5% higher. CPI being the Consumer Price Index, which is their gauge of inflation, how much things cost. But as you remember, my key inflation pomegranates are 0% year over year. And that's what's important to me. That makes me very optimistic. Functionally, what this means is to us as traders is if you're going to be in the seat, if you're going to wake up early for any day next month in October, is going to be the October CPI print. That's going to be the next update of the consumer price index. Does it go up? Does it go down? Because the market is going to be looking at that like a hawk. Because if it goes up, that means that inflation is not coming down to 2%, and the Fed is probably going to make do on their promise during this Wednesday statement to raise rates if inflation is not coming down. If CPI goes down, if it goes down from 3.7% like it was this last week or the week before, then that means that they may not have to raise interest rates. So next month's CPI, and we'll talk about this, and I'll probably do a live stream for it because I think it's going to be incredibly important. I'll wake up early for you guys if you guys want to wake up for that. That's going to be a good, and as a trader, that's going to give a lot of good futures trading opportunity, I think. Or there's going to be an opportunity there somewhere. There's going to be a lot of money moving around. But basically, we're going to be waiting in a sort of kind of negative malaise because of that statement on Wednesday until we get some kind of economic news that gives us a direction the Fed may go. And so that's really why a certain amount of pessimism has kind of come into it. But really and truly, as a technical analysis, what I would say is that you didn't quite get to the all-time high, or not, excuse me, not all-time high, the year's high here, kind of failed last week. But back to the original market recap, we're not totally bearish yet. But CPI is going to be probably around the middle of October, around here. That's going to be enough time for us to really determine, does the market come out here and we go bearish, or do we do a little turnaround and do we stay bullish? But yeah, next month's CPI is going to be really important. Incidentally, October CPI print for 2022 was here. That was the big spike indicator, free if you send me a message on TradingView with your username. False breakout to the downside, which again was at the 50% of the whole gosh darn market. Ping. Let me take off Ichimoku to make it clear. Ping. October CPI. Ping. 2022, a year ago, that was where the market turned back up. And here we are a year later, and a lot is going to be hinging on the October CPI coming up next month. And so that's what it all means. That's my story. But I'm going to be looking to see what happens on the daily price action, more so than that story. But I will be also sitting there trading the October CPI because I think it's going to be a big, high impact news event. So, all right. Let's start. Go say, Richard. What's up, Richard? I would say it closed below it on the daily. Let's see what happens Monday on Tesla. I hate DCA, but this is my way of FOMOing. Okay, so I still FOMO. I want to own more Tesla. Just for that, the case I made about the EV charging network, the fact that I own one, I love it so much, the fact that I never met an owner. Yes, people have found me anecdotes of people that don't like their Teslas, but I've never met an owner that regretted buying a Tesla. It's great. I really, really enjoy it. And I want to own more of the company. I really do. I really believe in it. I'm a Tesla maxi. And so I'm happy to buy some Tesla at 245, even if it goes down a little bit. But this is me FOMOing. Like if I was buying it, I didn't buy it here, but I waited for it to kind of do a little. Didn't buy it here, but I did buy it here. So Tesla may have closed below the support. I'm going to forgive it. We'll see what happens on Monday. All right. Let's see. I talked about TLT, unfortunately. Oh, is my audio not working? Hi, Nick. Saw a video of me in the past. You said there's a nice pattern for you to get in is when the price after a fall starts to make a higher high and then a higher low. Yeah, you can look for that. Yeah, you can. Do you think deer is a short? Good question. Let's take a look. I'm not sure if we looked at it there, but basically you do have an instance of coming up to an all-time high and doing a false breakout here. If I was going to short it, I know this is hindsight, But this is the trade that I would have shorted, where you have this trend that got us up here. So you know that your support or your potential target is going to be 397.78, and it has a really, really nice pullback like so. See how you have that reaction off that false breakout? Gives you a few days to prepare and take a short in August. Again, it's just a few pennies, but if it was bullish, it should have gone. And so you set your entry there. Can we get a 3-to-1 down to there with a stop just above the high? I actually would have said no to this trade because it's short of 3-to-1. It's 2.83. But maybe you're more aggressive, and it would have worked out. But that's how I would have looked at this as a potential short. As far as now, I mean, what you'd be looking at is this thing's just chopping. It's chopping. You got 3 highs. You got a bunch of lows. Your first level is going to be 345. And so really what you're trying to do is you're trying to capture that with a high degree of probability. So, but your stop is going to have to be above the high, basically. Because, look, this thing could jump around, essentially, and come all the way back up to maybe potentially... The way I look at it is this. You got to give price the ability to come back up here, and you got to give it the ability to come here, maybe to here. Okay, because you're caught in a range, and you don't know when this range is going to end. And so if you go short here, you really can only... You can really only give yourself a high probability of maybe getting down to this low or maybe getting down to these lows. Okay, that just makes sense. All right, so let's be aggressive there, and then we have to make sure that we give ourselves enough risk to keep it inside this range. And so even down to that really, I would say, optimistic target, you're only pulling about a 0.75 risk reward to give yourself a stop up by the high. Now we can sit in here and say, like, well, I'll give it this much, but to play the broader price action that's going on, it's just not a short that I would take because the risk to reward is not there. It's not favorable. You're taking more risk than you can potentially make. So no, I got to say no on that one. I would not take that short. All right, let's see. Casey's trade, Casey's breakouts, MAA, Mid-American Apartment Company. I like it. I like it how it's breaking these lows. It's already broken the 50%. That's good. Casey, were you already in Dollar General from last week? I remember you were in that. Did you bring that up last week? That's good. This is in... see, this is the kind of opportunities you want to look for if you are bearish on the market. Companies that are getting very weak. Stocks that are weak. Because if the market does start to go down, they're going to go down even more. NNN, REIT. Yes, but a REIT is going to be a little bit of a different beast. I believe they probably have... they probably pay a dividend. The REIT that I'm most familiar with is Mort. Don't really know. I'd rather just trade a non-ETF. I'd rather trade a regular stock. TNDM. Let's see. This is another breakout continuation down to the low. Getting into those low dollar values. So I'm not really sure I want to short the shares on that. But yeah. All right. NEE. Oh, wait. What's BRN1? BRN1. Oh, okay. So that's oil. All right. We talked about oil. I think it's bullish. And if you're specifically looking at BRN, then you're going to be bullish up to about 104. So you got room to go. Still bullish. NEE. Is it coming down to a level? Nope. It broke it. Here you have an instance where you have a key level at 68.68. This is a weekly chart. And so what you've had over the last couple of weeks is an opportunity for it to really break it, come back, confirm it. Yeah, this right here, you got to watch it. This thing is likely going to try to break that level and continue on downward. RTX, I got an alert on this today, actually. RTX hit a 50% level. Let's come back and see if we can get some kind of a setup here. It closed below it, but RTX is at a major 50% level. Yes, I saw this today as well. Didn't buy it, Want to wait for a setup because there's really, we'd have to ignore all that past price action, but it does have good reason to. You got the inflections here from back in 2020. RTX we need to look at. Is that Raytheon? I don't think that's Raytheon. All right, ACH. HCA. Yeah, if you're taking bearish breakouts, Casey, then this week has been good. HCA Healthcare. Maybe look for a pullback at 234.49. That's what I would look at there. Oh, you're shorting it. Yeah, it's trending on the daily. But I would say, what's your, let's see, 251 and a price target of 244. Give yourself a little bit more. Give yourself 234, not 244. That's what I would do there, because that's going to be your 50% pullback. But your trade. That's what I would look for, though. All right. KV Vicaria. BTC could be retesting a 50% breakout. Let's see. Hold on. BTC could be testing a 50% breakout from 281. Oh, August 29th. August 29th. Yeah. August 29th. Came up to there. What do you mean? It could be testing a 50% breakout. It really hasn't done a breakout. You had this little dip here about a week ago, but it never actually broke that low of the Elon SpaceX FUD. This is, I mean, the 50% on Bitcoin is from the March. The one in play right now is from the March low, the banking FUD, to here. And then you have, of course, your major lows that have defined it in here. If you take out these lows, if it goes into this area right here, that's going to be a massive liquidation event. It's got a chance. It's got a chance right now. It's trying on the daily to maybe get itself back out. Maybe. It's at a 50% right now of this little uptrend. Is it? Are we at it right now? Let's see what happens. Hold on. So over the weekend, I would have an alert at 26,212. That's a possibility that it can possibly hold and then maybe go up to get yourself bullish on the daily. And that would actually be a very good sign. But it's an if. It's an if. If it can get itself clear above, let's call it 28,400, then it could potentially be a bullish situation. And a lot of my friends that don't like it that I'm short are going to be sure to ping me when that happens. I don't even set an alert. If it does that, people are going to start pinging me like, hey, should have bought Bitcoin. I'm going to be so rich. I'm a secret king. We'll see. I hope that it does well for them. I really do, actually. All right. YouTube and Discord working. All right. Well, that's good. That's good. All right. We're at the end. We have concluded this program. Thank you all for your symbols to look at. I hope you learned a little bit of something from the opportunities. Again, links are below to Discord, TradingView, and YouTube. Follow on there. I do this every Friday at 4 p.m. Should do it definitely next Friday, but I might go out on vacation on October. We'll see. But as always, trade wisely. Have a great weekend. We'll see you guys next time. Bye-bye.